Welcome to S&P's European loan market video overview, detailing leveraged finance trends and activity during October and early November 2010. I'm Suchit Gupta, a member of S&P's Leveraged Commentary and Data team, a unit of S&P that is not affiliated with S&P Ratings. For the next few minutes, I'll walk you through a review of recent loan and high-yield bond market trends in Europe, before winding up with themes to watch for in November and early December. Before we start, please know that you can follow LCD on Twitter, Facebook, and can join the more than 4,000 contacts in LCD's Leveraged Loan Group on LinkedIn. The links to follow LCD are in the info section on our YouTube channel. Before getting down to business, some fine print. This disclaimer, courtesy parent company Standard & Poor's and McGraw-Hill, covers all the bases. Please read it at your leisure. There was no slowdown in both the primary and secondary markets in October, as the markets picked up where they'd left off at the end of the third quarter this year. Combined high-yield and leveraged loan issuance for the year stands at 67 billion euros, compared to 40 billion euros for all of 2009. The S&P European Leveraged Loan Index, the LE, had a positive return of 1.42% ex-currency in October, bringing the year-to-date returns to 6.57%, again, ex-currency. The successful syndication of loan transactions in the market has boosted confidence among arrangers and investors. Original issue discounts, aka OIDs, for new issue loans are almost half the level of what they were earlier this year. And the average break price for deals entering the secondary is rising to above par. The secondary market has been buoyant on the back of continued inflows into high-yield and prime rate funds in the U.S., a good proxy for inflows, combined with a spate of repayments from capital markets activity, including secondary buyouts and bond for loan takeouts. Improving fundamentals were also seen in default rates, both on the principal amount and issuer count, as they both eased again. Focusing on the secondary loan market, this chart details the average price of LCD's European Flow Name Composite, a measure of the 18 largest, most liquid loans consisting of 10 issuers since 2002. The secondary market was up almost 75 bips for the month to close at 96.71, just 4 bips shy of its all-time high for the year in April, right before the volatility caused by the sovereign downgrade of Greece. This next chart details the average price of LCD's European High-Yield Flow Name Composite, a measure of the 12 most liquid high-yield issues since the beginning of the year 2010. The high-yield market rose to an all-time high of par during the month of October, before closing the month at 99.4. Keeping with the trend of a strong and healthy secondary, this next chart shows the ratio of advancers versus decliners in the LE. That is the number of credits who've gained in price in the secondary versus the number of credits who've declined in price in the secondary. Advancers led decliners by a ratio of 6-1 in October. This is the highest read so far this year, after January's ratio of 7-1. This next chart details the monthly return of the LE, a broad measure of European loan market returns that LCD calculates. The European loan market posted a gain of 1.42% for October, up from 0.96% in September. This brings the year-to-date return for the LE at 6.57%. Now from the secondary, we turn to the primary. This graph details new issue volume for both leveraged loans and high-yield bonds. New issuance for leveraged loans during the month of October stood at 2.6 billion euros, while high-yield issuance reached 6.2 billion euros. This is the highest monthly read so far this year for high-yield issuance. This next chart details default rates, and default rates continue their southwards migration. The default rate by principal amount decreased to 5.26% at the end of September, from 5.33% at the end of August, while default rate by issuer count decreased to 7.69% at the end of September, from 8.62% at the end of August. In summary, the market tone is healthy and there are good foundations on which to build up the primary issuance calendar, whether for the remainder of the fourth quarter or into early 2011. Arrangers hope to take advantage of steady demand to bring transactions to the market, both on the loan and high-yield fronts, including refinancings and potentially more issues to support M&A activity, especially secondary LBOs. That brings us to the end of our overview. I hope you found it informative. We'll update the analysis each month and plan to have analysis of other specific European market segments going forward. Check out LCD's YouTube page for other video analysis of the leveraged finance market, including U.S. loan market wrap-ups for October and November. The link to the page is in the description for this video. For more information on LCD news or research in Europe, you can contact Anna Cini. You can email her by clicking on the link in the info box. Thanks very much. We'll see you soon.